Hi, and welcome back to the Miami Real Estate Podcast. I'm your host, Omar WIndt, Communications Executive here at Surveyor Real Estate. Joining me in the studio today is Luca Dahlhausen, CEO and co-founder of Realfinity. Luca, welcome to the show.
Thank you, Omar. So nice to be here. Excited.
Yeah, as am I, because today ladies and gentlemen, we are talking about mortgages, but not in the way that you think. That's because Luca's company, Realfinity, is revolutionizing the real estate industry by enabling real estate professionals to seamlessly offer mortgage services through its loan origination and processing platform. By integrating mortgage services, Realfinity helps agents increase their revenue, also saving their clients significant costs on mortgages. So Luca's going to tell us all about that, where the opportunity lies in this post-NAR class action lawsuit landscape, and how their business, which has already originated over $25 million in loans since its launch just a couple of years ago, is sort of tackling America's biggest asset class. So how was that for an intro, Luca?
Well, that's great. That's great. Omar, it's always great to be here at such a nice office. You guys are obviously one of the big names in the city. So yeah, happy to share a bit about what we're doing and, educate the audience.
Absolutely. And so the Miami Real Estate Podcast is brought to you by Surveyor Real Estate, as I mentioned to you, Luca. But our audience is really all of our colleagues in this amazing city of Miami and really the South Florida area. There's over 50,000 real estate professionals in the region, and I don't know that many of them have heard of something like this. So I guess let's start at the top, right? So what is Realfinity, and tell us your story about that and sort of how we got here today.
So first and foremost, Realfinity is a correspondent lender. We exclusively hire real estate agents who have both a real estate as well as a mortgage license. So that makes us very different from your traditional lender. And we're basically doing that by delivering the first embedded lending platform for the mortgage industry. I spent the last couple of years prior to founding Realfinity as a traditional lender. Our co-founders ran a company that we sold to Cross Country Mortgage, the fifth largest lender in the US prior. And the concept is very, very simple. Where the traditional lender has loan officers who are sitting in branches, who are waiting for referrals from you guys, which I'm sure every real estate agent that's listening to this podcast has experienced that in the past. We're essentially trying to enable you as the real estate agent to evolve in the value proposition. And I always like to go ahead and give an analogy or help people visualize this. You look at search. Prior to the advent of Zillow and Redfin and any of the other portals, the real estate agent had a huge value proposition when it came to search. And that has evolved, right? So a lot of people might be searching pre-hand for their asset, and the real estate agent is delivering a lot of value down the value chain beyond search and is evolving on that level. We see a next natural step of real estate agents helping educate clients on the financial aspect of the transaction as well. And we're here to equip these agents to do so.
One of the things that really jumped out at me when the topic, came onto my table is I was not even aware that realtors were able to provide mortgages. Is that something relatively new?
You have to split the mortgage landscape up always by the regulating authorities. On the conventional loans, this has always been legal. These conventional loans are loans that are either sold to private outlets or to Fannie Mae and Freddie Mac. The non-conventional side are all of your VA, FHA, USDA loans, all the loans that are regulated and secured by HUD, which is the Housing and Urban Development Department. And so HUD actually, in December of 2022, for the first time, changed the laws allowing real estate agents to be dually compensated and to represent the client both on the real estate as well as the mortgage transaction. So yes, indeed, there was a legislative change that has really opened up the door for this. And that's something that we're now seeing, drive a lot of momentum for us.
Awesome. So, this recent change has opened up the door. And then you mentioned, the value chain and what the value that realtors offer. So having a clear articulation of the value proposition that you offer is now even more important in this post-NAR class action lawsuit landscape that we find ourselves in, right?
Absolutely, yes. Think about the real estate agent who is continuing to evolve in their value proposition. What is happening today is these real estate agents are typically going ahead and, asking the client, have you been pre-approved, right?
Mm-hmm.
Are you already working with a lender? And maybe the answer is yes, maybe the answer is no. Oftentimes they end up referring and saying, hey, I have this lender that I've been working with for the past couple of decades. They're a great lender. I would love to refer you over. There's a huge, gap and break there in the process. And oftentimes real estate agents aren't so educated about the financing aspects of the transaction. And so absolutely, we see this as a major point where real estate agents can continue to deliver value to their clients and can post NAR just as much as before NAR as well, though, really add value to the transaction. And then you obviously have the component of being able to, earn additional revenues. But let me get one thing very, very clear here. I think what's very important to realize is we require the real estate agent to actually do certain tasks in order to be compensated under, RESPA and all of the regulating laws that are, verifying and making sure that only people who are actually fulfilling certain tasks on a real estate agent, on a real estate transaction are also compensated for it. So real estate agents through our embedded lending platform have the ability to actually start a loan application, issue an initial pricing quote to a client, being able to deliver a pre-approval, and do all of these things for the client in a very fast and streamlined manner.
Let's sort of break that down a little bit, because I'm sure a lot of our listeners are thinking, well, that sounds interesting. I'd like to be able to offer, the seamless sort of mortgage services. And then you just started touching on the steps involved. But break it down for me. How does it work getting started?
So let's just agree that you have a buyer who's looking at a new development or at a condo that they're looking to buy, and they come in this scenario not yet pre-approved. So they have a stable job, they are willing to buy, but they haven't, gotten a full pre-approval from a lender yet. Your typical scenario would probably be like, okay, we've looked at the condo. The next step would be to put in an offer if you're really interested in this. But in order to do that in today's market, we all know they need to have a pre-approval letter going with the offer. You would probably tell them, hey, I need to connect you to my lender friend at Wells Fargo or any other bank.
Sure.
And I want to go ahead and get you pre-approved. And probably that would work just fine. Now, if you're a dual license agent with Realfinity, you can open up your app. You can go ahead and start a loan application for that client, and you can ask him on the spot, hey, Mr. Client, were you in the military by chance? If the answer is yes, there's a package that you select for that client, allowing them to upload, everything that is needed to make them eligible for a VA loan, which has much better rates than a traditional loan. You might be able to ask them on the spot, are you self-employed or are you, W-2 employed? Based on that, you select the right package. The client has a bunch of documents that they need to upload through our application. Once they've done that, our processing team reviews those documents and will within 24 hours issue a pre-approval. You as the real estate agent are being kept in the loop about every single step that's happening, and you'll be notified the moment that pre-approval becomes available. What's the process today? Let me ask you. If you go ahead and today, refer to another lender, are you being, notified within 24 hours? Typically, yes, right? But this obviously streamlines things a lot.
Sure. Just to clarify, is Realfinity giving the licensing, or does the agent need to get independently licensed?
Correct. It's similar to the real estate, right? You have your company license, which obviously we provide all of the infrastructure. In order to have that, we have the company licenses, but then every individual needs to maintain their own license. Now, just like in real estate, that license gets exclusively sponsored with one company. So you as a real estate agent yourself, you would have your license sponsored by whatever brokerage you're associated with. The same thing happens on the mortgage side. We help you obtain that mortgage license. We have a course there, obviously knowing most real estate agents today don't have that. And we provide them with a path to get that license. In fact, we help you, support you along that way. And then once you have that individual license, it gets sponsored by our entity. Now, that doesn't mean that 3-4 years down the road, if you want to move somewhere else, do something else, you still have your individual mortgage loan originator license, which also requires CE and all that stuff that you guys are dealing with on the real estate side as well.
Now, what's the next step that you mentioned? Sort of like the realtors would have to complete certain steps throughout the transaction in order to be compensated, I think if I heard that correctly.
Correct. Yeah, let me walk you through it from start to finish. So let's just say you're a real estate agent today. You would sign up for Realfinity. You get into a consultation call, typically with one of our account executives. They show you the platform. They show you, what this actually looks like. And they give you an idea of, what does it take from you in order to do this, so that you actually are willing to say, hey, I want to evolve in this space. I think I would add value for my clients. After that, you request what is called an NMLS number with the regulator, and it's like a social security number. It stays with you for life. It's a bunch of personal information you enter there, and they issue you what is called an NMLS number. Now, with that NMLS number, you sign up for our licensing course. We have an exclusive partnership there with a company that actually purchased Gold Coast, which most people in Florida know for real estate education. And so you go ahead and you get access to 20 hours of pre-licensing education. That's a bunch of videos that you're watching, making yourself familiar with all the mortgage-related content. After that, you need to pass what is called the SAFE exam, which is a federal level exam on the mortgage side. And then, depending on the states, we have agents in Texas, Florida, California today. You need to potentially do another hour or so of state-specific education. Once you have that, your license gets sponsored by us, and you're now up and running on our platform. We've had agents walk into the door, do the initial consultation call, and have a mortgage license no later than 14 days after that.
Once they complete that process, right, now they're licensed. And what does it look like on the transaction side? What steps would a realtor do to complete the mortgage process?
So the real estate agent would first and foremost start the loan application. We need to get the original documents into our systems, right? We need to know everything about this client. Is there a borrower? Are there, two borrowers? What does that situation look like? These are all very standardized forms in the lending industry. And, that borrower needs to fill out that loan application. You as the real estate agent have actually the ability to do it together with the client, or the client can do it by themselves. But you have to start that, right? After that, it's about document procurement. Every single loan file needs an initial submission. I'm talking driver's license, tax returns, W-2 pay stubs, bank statements, whatever else they need in order to, get this client pre-approved. Once that has happened, the file goes into processing and the pre-approval gets issued, or the initial, loan approval gets issued. The second most important component is product eligibility and pricing. What product is this client available or eligible for based on the initial submission? And then what does the pricing look like? There's many different ways of structuring a loan. Some people want to buy down the rate. Others, may not want to do that. Our platform gives you as the real estate advisor the infrastructure to very easily identify the eligible products, and then also what pricing is interesting for this client, and present them with different opportunities, right? That's really what it's all about in the initial phase. Once the loan is then under contract, or the deal is under contract, it's all about locking in that rate that the client has decided for. And you can literally issue a lock request directly through our platform.
Interesting. And so once they've locked in the rate, then what happens?
So now the loan is live, right? There's a purchase. There's probably a close of escrow date as part of that purchase.
Sure.
And we have a, fully pre-underwritten approved loan. That means we've pulled credit on that borrower. We know their liabilities. We know their income. We know their assets. Now it's about bringing that loan to closing. And this is really where our loan processing team comes into play. They are the ones that are, getting in contact with title and escrow. As you know, title and escrow is always defined in the purchase contract, right? Mm-hmm. So they would be the ones getting in contact with title and escrow, making sure, that we come to a point where we can issue what is called a CD, a closing disclosure, right? Making sure that, we are working towards a funding date and all of these things. And these sort of administrative steps, that's where we come in as an infrastructure provider. None of our dual license agents are ever reviewing tax returns, doing income calculations, working with title and escrow on the nitty gritty of, getting a CD out and things of that nature. It's about, being the advisor to the client and sort of fulfilling that role first and foremost, while getting processing support and the infrastructure to do the loan from us.
I love that because that's one of the things I figured our listeners will be wondering is what's the time commitment going to be in it. And it sounds to me, aside from the initial sort of licensing, it's really about, as you mentioned, document procurement, sort of maybe being a sort of concierge or a shepherd throughout the process, but not actually in the weeds originating a loan, right?
That's exactly right. So you need to be very careful with the language around that. That's the reality, because obviously we are all, very, very careful around making sure that, you're complying with RESPA, which is, the law that is sort of regulating who can get paid on what transaction and what capacity. Mm-hmm. And yes, you are absolutely right. The nitty-gritty processing of a loan is always supported by our infrastructure, while we make sure that, the real estate agent, the dual license agent is fulfilling certain clerical tasks, which are all about, starting the loan application, procuring the documents, making sure the client has the advice that is needed to, close that file.
You mentioned numbers and compensation, and this being, real estate podcast, we can't come out of here without talking about numbers. What does the compensation look like for this dual license agent, on a transaction? How does that work?
Realfinity is building a product for the masses, right? For Main Street America. Obviously, the price point here in Miami, is sort of becoming more on the higher end now. But today, our only compensation plan is 1.4% of the loan amount that gets paid to the agent with a dollar cap of $5,000 per transaction. Now, the dollar cap doesn't mean that beyond that, we as Realfinity make that money. It means that, we're capping the commissions on any deal in order to have very competitive interest rates, because the number one thing we want to accomplish here and that, we're striving for as a mission, or that is our main mission with the company, is to offer better interest rates to the end consumer, right? You never want to find yourself in a position where you're advising your client, hey, I can help you on the mortgage side as well. They walk out the door and get a better rate elsewhere. That's really, not what we are trying to accomplish. So that's the model that we have today. It resonates most in sort of your mid-market America market. So we are working on models now where we're going to have something for more exclusive agents as well, where you can earn more money on the transaction, given that the loan amounts are much higher, given that the files are typically significantly more complicated. You're dealing with self-employed borrowers, you're dealing with, foreign nationals potentially, you're dealing with people that have stock options in companies, things of that nature, that, would obviously justify that. But today we only have that one compensation.
And you would define mid-market as what price range?
I think anything up to, $1 million to anything like that.
Loan amount.
Yes. We always like to look at what is called the, conventional loan limit in any given market. And, it's basically anything that's not the jumbo loan amount yet.
Let's talk a little bit more about that value to the clients, which is a very important part of this conversation. So on one end, you have the value of the seamless service, but how do you accomplish these lower rates, and talk about a little bit about that benefit to the consumer?
When you look at mortgages, they're essentially commodity. What do I mean by that? There's no good or bad money. As long as you're getting the money to purchase that house, there's no quality difference in whoever, gave you that money, if that makes sense. If you try to visualize it, there's sort of a base price that every lender lives by, right? And that's largely defined by capital markets, right? The Fed lowering funds overnight rate, the ability to go ahead and, adhere to that capital market structure that is ultimately defining, the base price. Beyond that, it's all about what is called the cost to originate a loan. If I'm a lender and I have, 90 branch offices in great locations, and I have, a lot of advertisement spend, and, I have brick and mortar people sitting in my offices every day, and I have, a front desk, and I need to cover all that overhead ultimately, right? And I need to, break that down on the loans that I'm originating, and there's going to be some sort of an equation that will result in that's my cost to originate a loan. And, that is the margin that I need to make on every loan. And if you look at the base price plus the cost to originate a loan, you're resulting at the interest rate that can be offered to the consumer in one way or another. And so we at Realfinity are trying to minimize that cost to originate a loan. And so how does that work? Well, the real estate agents that are dual licensed with us are, they have a main job as a real estate agent. They are no minimum wage, no health benefits. Why? Because their main job is being a realtor. They are outside sales individuals. We don't offer them an office. They all have their offices from the real estate brokerage anyways, right? And so they operate on our technology infrastructure. What does that create? It creates an extremely lean infrastructure and an extremely lean cost model, allowing us to originate a loan at a lower cost. Now, getting back to the beginning of the conversation, there's the base price plus the cost to originate a loan. If our cost to originate a loan is significantly lower than the one of a traditional lender, then we will win in price, right? And I think a big component of that is as well, how are you, finding out about the lenders that you're referring your business to today? They're spending advertisement dollars to get to you, Mr. Real Estate Agent, to get your referrals, right? If you now are completely bypassing that advertisement spend is going right back into the pocket of your consumer. And that allows us to ultimately originate a loan at a much lower cost.
So the origination fee is lower. What about the interest rates?
Most people don't understand that, but at the end of the day, there's origination fees and there's other fees that can be, associated with the loan, but all the cost results in interest rate. So I'll give you an example. I could go ahead and say, well, my interest rate is X, but I'm charging you a lot of closing cost, right? Then, that would mean that all I'm really doing is I'm shifting that cost component into the closing cost, right? I could say, hey, my interest rate is a bit higher, but I'm charging you less interest, less closing cost. At the end of the day, there's something called the APR, which is what I recommend every real estate agent to look out for. And the APR is the overall cost associated with that loan. And that's what you should adhere to, and that's what you should live by. There is, everything results at the end of the day in the interest rate, in the APR of a loan, and whoever has the lowest cost has the ability to go ahead and have the lowest APR.
Makes sense. Speaking of the market and rates, what's your take on what's going on and where are interest rates going?
I think this year we're probably looking at another 50 basis points in rate lowerings between now and the end of the year. I think you're looking at another 100 basis points next year. How fast that is happening, no one really knows. But you are looking at a declining interest rate environment, and so, I think a real estate agent that understands this, and by the way, we're issuing great materials, great educational content to our agents. We're giving them rate updates on a daily, showing them, hey, this is stuff you can share with your clients, educate them about this. There's so much wrongdoing still out there. I'm seeing people that are advising their clients in today's market to go ahead and do a rate buy down. Why would you advise a client in today's market knowing that rates are going to decline, that client will have the ability to refinance? Why are you advising them to buy down a rate with a point of two or two, to get a lower rate now? You're locking them in, you're locking them out of the opportunity to refi in what you know is going to be a declining interest rate market, right? And these are just things that happen because people aren't educated, and it's a black box, I'm sure there's a lot of listeners on this podcast that, have done many transactions, many real estate transactions, but the mortgage world is unfortunately still being kept a black box in many scenarios, and we're really here to change that.
I love that. I'm excited about what I'm hearing. Luca, dive a little further on what type of training and educational resource you offer to your dual license agents.
First and foremost, obviously, it's sort of the base, right? Get up and running. Every agent within our company is associated with what's called a concierge. That concierge is, most of them are former agents themselves that then got lending experience by, for example, switching to work for a bank or something along those lines, and that are now, operating within a concierge role. What does that mean? It means I'm an agent and I've never served a veteran borrower, as an example, or I've never done a deal with somebody that was self-employed. There's going to be questions that you have. We have an individual that's there to help you all along the way, all the time. And then, that's sort of I call that live deal support, right? When you have a deal that's going live on, you need some support, we're there to provide that. On the other hand, you have sort of the recurring educational content, recurring updates. And there it's about, number one, visibility, and then number two, transparency. What do I mean by that? I mean, any real estate agent should know, literally on a daily, how has the market developed over the last week or two? Why? Because you might have ongoing live deals and you want to advise your clients, is it the right time to lock in your rate right now, or should you float this deal for another 3 weeks, knowing that close of escrow is mid-December? Mm-hmm. I'm just making this up, right?
Sure.
But this is stuff that you should know. So we're providing you with, rate updates on multiple occasions throughout each week, letting our dual license agents know this is how the market is developing. Take a look at historic rates over, the last few weeks. This is where things are going based on what we're seeing, right? We're providing them with the ability to say, hey, I have a listing and, I want to be able to issue a sample scenario of 20% down and then 10% down. How much would my monthly payment for that house be? Because I want to be able to tell that client that walks into the listing, this house is going to cost you X amount of $1,000 per month. Here's a sample calculation for you. These are all things that they can do. Why? Because they are dual license agents and they're actually allowed to quote rates. They're allowed to do all of these things, which before was not possible.
Yeah, I mean, as you're talking, I'm just seeing the possibilities are endless for savvy real estate professionals that want to add this sort of value add to their platform, and also, value add for their customers, but also an increased revenue stream. So it's amazing. What does this cost to realtors?
So we operate on a transactional business model. We win when you win, meaning we earn parts of that commission. About 33% of the overall, money earned on any given transaction goes to us as the infrastructure provider. We're providing a lot for it, obviously, the whole loan processing, the platform, the licensing, all of it. In fact, every single agent with us has to be W-2 employed. So you get the E&O insurance, right? To make sure that you're covered in case there are mistakes. All of that is being covered by us, right? And there's a huge value to that because today there is no effective solution for an agent who wants to start offering mortgage as an ancillary service of, somebody providing them with the entire infrastructure to literally plug and play, right? And so that's what we do. That's how we make our money. We don't charge you a monthly retainer. We don't charge you, any fee like that. And so it's really transactional based.
Understood. And that's 33% off of the capped 1.4.
No, that's already calculating it in. So we pay you out 1.4 with a cap of $5,000, but we're making about 33% of the overall commission.
Understood.
So outside of that.
And what's the cost to create an MLS account for that licensing, if you know?
I don't know the exact numbers off the top of my head. They also sometimes change, but you're looking at a couple $100 to create your exam and so on and so on. And in fact, we actually have specials all the time where we help agents, fund that initial education, fund that initial getting of the NMLS license, and help support that. Those are certainly things that we're doing, especially in the early days. Of
course.
There's a lot of hand holding that we do on that level.
So with that being said, it's a low relatively cost to entry and a great, opportunity for upside for realtors. I like that. We'll have to work with Luca on a promo code for Miami Real Estate Podcast listeners.
Yeah, we should, absolutely. But I will say one thing, maybe to the people that are considering doing this is we see the people fall or filter through naturally. Why? Because while it is 20 hours of, watching some videos and then ultimately passing exam, it is not something that you, just do like on the side really quickly. You can do this on the side, absolutely, but you need to have some dedication to get this done. Also because, there's some, additional stuff that they require from you afterwards to actually get your license, sponsorship live and all of that. I think if you don't really see the value, you're going to get filtered out naturally. And something great for our business. Why? Because we want those agents that are really serious about doing this and adding the value to their client, right? And so it's something that we're seeing, and I encourage everybody to do it, and you'll see for yourself if this is something for you or not,
Absolutely. And so how did you come up with this idea?
Like I said, right, I spent, my prior couple of years in running a traditional lender, so I've seen the way business is being done today. I've seen the pitfalls of it. I've, in fact, had to deal with the problems that come out of it, right? Which are, you have uncompetitive rates, right? When you have all of these relationships that you need to nurture, all of these middlemen in between, and all of these brick and mortar branch offices or whatever else it is, right? That is driving up your cost to originate a loan. And I wanted to change that, and I genuinely believe that real estate agents today are having to evolve in their value proposition. And I also genuinely believe that the real estate advisor is the front, of the transaction, and they have so much value to the client, and there's so much trust between, the client and the real estate advisor. And I think that will continue to grow only more as, the transaction becomes more and more digital, right? And so I think if you can empower this real estate agent to be able to do additional things and to really advise holistically on this real estate transaction, you will succeed. And we're an agent-first platform, so it was a very natural step from there. If you look at what I've done before and where we're going to come up with this idea. Now, one thing I do want to mention is it doesn't stop with you've now gotten the client to purchase the house and you've helped them to get the loan as well. These people are living, and we're seeing this right now with some of our agents. They're looking at the clients that they've sold homes to over the last couple of years, and they've seen immense appreciation in value here in this area, right? And they purchased at high interest rates. So what's happening? These people are getting the rate updates. They see where interest rates are at. They're seeing there's arbitrage there, meaning my clients, are in a 7.5% rate, and now the rates are in the low, high fives, low six, right? There's a huge opportunity there. And by the way, they have so much equity built up in their house. So they're helping them get a cash out refi 2 years after that transaction. The client is not ready to transact and buy another house. So typically you as a real estate agent would not have a lot to speak to that client. But you now come into their door and say, hey, I'm your real estate advisor beyond just buying and selling. I'm seeing that there's, this happening in the market. You've gained immense, appreciation and value. Have you thought about potentially cashing out some money, securing maybe a bit of a lower rate, and being able to then, buy an investment property or whatever else that is. That is where the real estate agent will go and evolve. And those are things that I want to, make sure that the listeners are really understanding, that it doesn't stop with buying or selling initially. There's much more to this.
It's a very good point that I hadn't thought of, but it's essentially, not only for new business, but your loyalty and repeat business from past clients that, as you said, maybe you didn't have a reason to reach out. Now you do.
Absolutely. Yeah.
So a lot of great info here. We're going to wrap it up because I know you have to go. But final thoughts for our listeners that are out there that they're hearing this. What do you want to leave them with?
Go check our website out. Do your own research. There's pros and cons to everything. This is not a model for everybody. That's the reality. And there's going to be people that, will continue down this path. There's going to be people continuing down maybe another path. But, be open-minded, right? And continue to evolve as a real estate agent, because the client's demands will change as well over time. And, I'm a 28-year-old home buyer myself. And, I expect something different from my real estate agent than maybe the generation before me did. And so I think, staying open-minded is always a good thing. So, yeah.
I like that. Well said. So, ladies and gentlemen, we're going to leave it there. This was Luca Dahlhausen, CEO and co-founder of Realfinity. They're changing the game in mortgages. I like it. And your website is realfinity.io?
Correct.
Perfect. We'll put it in the show notes as well. Until then, thanks for listening, folks. Remember that here in Miami, the future is always bright. Luca, thanks for being here.
Love it. Thank you, man.